Rezolve AI stock is currently trading at $2.72 as of March 24, 2026 at 11:45 a.m. ET, marking a significant intraday climb of 7.09%. While the broader market might be looking at this as just another volatile swing in a speculative sector, the reality is far more interesting. We are seeing a distinct disconnect between the retail narrative and the institutional heavy lifting happening behind the scenes. Most traders see a stock that is still roughly 68% off its 52-week high of $8.45, but they are missing the fact that the company has just activated a massive revenue engine through its acquisition of Reward. This isn't just a bounce, it's a repricing of a business that has suddenly found a way to bridge the gap between AI hype and actual bankable transaction fees. The expectation from the casual observer is that Rezolve is just another high-burn software play, but the reality is that the company is currently on stage at the Roth conference with Microsoft, proving they are the transaction layer for what's being called agentic commerce. This is the first major insight you need to grab onto. Rezolve isn't trying to build the next chatbot, they are building the buy button for every other AI on the planet. When you look at the price action today, moving from an open of $2.57 to as high as $2.77, you're seeing the market start to digest the guidance for $350 million in 2026 revenue. That is nearly 10 times the growth compared to previous cycles, and yet the valuation is still sitting at a level that suggests the market doesn't fully believe the numbers yet. Common ground in the investment community right now is that micro-cap AI stocks are too risky because they lack revenue traction. People look at the historical losses and think the story is over. But if you challenge that belief with the actual data from the recent Reward acquisition, you see a company that just added $90 million in EBITDA accreted revenue and gained access to tens of millions of cardholders through partnerships with Barclays and NatWest. This is no longer a pre-revenue bet, it is an infrastructure play. If you're using a Robinhood app or looking for investment help on various investing sites, you're likely seeing Rezolve pop up on high volatility scanners. But the real story is in the institutional activity. We've seen major shifts where firms like Goldman Sachs and Alyeska have been positioning themselves, and even with the stock trading at these levels, the institutional conviction seems to be hardening rather than fading. The daily volume we are seeing, hitting over 11 million shares yesterday and showing similar intensity today, indicates that this is not just retail diamond-handing a small cap. There is a rotation happening. Large players are looking at the $500 million ARR exit run rate for late 2026 and realizing that if Rezolve even hits 70% of that goal, the current market cap of roughly $1 billion is fundamentally misaligned with its peers. When you compare this to something like Nvidia stock or even Apple stock, you're obviously in a different universe of risk, but the growth multiplier here is mathematically much higher because of the low baseline. For those who are active in self-investing or using an individual brokerage to hunt for alpha, the tension here is palpable. The bears point to the 42% year-to-date decline and say the market has already spoken. The bulls, however, are looking at the specific catalysts of this week. We have Shop Talk 2026 and the Roth conference happening simultaneously. Rezolve is showing off Brain Checkout, which effectively eliminates the friction of traditional e-commerce. If you've ever tried online investing through a platform that felt clunky, you know how much value there is in a seamless interface. Rezolve is doing that for the entire retail world. Comment below how many shares of Rezolve AI you currently hold, or if you think the recent acquisition of Reward is enough to make them a serious competitor to legacy payment processors. If we look at the business model specifically, it's important to understand what actually drives the stock price beyond the daily swings. Rezolve operates through the Brain Suite, an enterprise AI platform. They aren't just selling software as a service, they are taking a piece of the transaction. Their brain checkout allows a consumer to see an ad, interact with an AI, and complete a purchase without ever leaving the interaction. This is the holy grail for retailers who are losing 70% of their customers at the cart abandonment stage. By partnering with Microsoft, they are getting a stamp of approval that most small caps never get. This is why when people look for online investment opportunities, they often get distracted by the big names like Tesla stock, but the real gains often come from these infrastructure layers that the giants are forced to use. The history of RZLV has been a rocky one, admittedly. Last year was a brutal period of dilution and skepticism. Shareholders were hit hard as the company raised capital to stay alive. But the pivot at the start of 2026, including the $250 million oversubscribed financing in January, has changed the balance sheet. They went from a company struggling for breath to one of the most well-capitalized players in the niche. This is the reality that is currently exceeding the expectation of a slow death by dilution. When you're using SoFi Invest or checking your Interactive Brokers account, you can see the technical setup forming a base around that $2.50 level. Macroeconomic pressures are still the biggest threat here. We are in an environment where interest rates and tech sector volatility can crush a small cap regardless of its fundamentals. If the Fed stays hawkish or if Middle East energy concerns spike, growth stocks take the first hit. However, Rezolve has a unique hedge. Their technology is designed to increase ROI for retailers. In a downturn, retailers are more desperate for conversion lifts, not less. This is why the partnership with iBuyDirect, which saw a 29x ROI using Rezolve's tech, is such a critical piece of the narrative. It proves the utility isn't just a luxury, it's a survival tool for merchants. Looking ahead, the next major catalyst is the earnings report on March 30th. This will be the first time we see the full year 2025 results and, more importantly, a detailed breakdown of how the reward integration is affecting the 2026 guidance. If the company confirms that they are on track for that $350 million revenue target, the current price in the $2.70 range will look like a historical anomaly. The risk, of course, is execution. Can a company that grew this fast via acquisition actually manage the integration without breaking the culture or the tech? That is the question that keeps professional wealth management teams at Fidelity or Schwab Intelligent Portfolios cautious. For the individual investor using a Fidelity mobile app or Robinhood stock trading, the play here is about identifying the inflection point. We're seeing institutional inflows from firms like Mirae Asset and Tower Research, but we are also seeing some short interest remain, which creates the potential for a squeeze if the earnings call surprises to the upside. The volatility is high, with a beta of 2.38, meaning when the market moves, Rezolve moves twice as far. That's great on green days like today, but it requires a stomach for the red ones. In summary, the narrative for Rezolve AI has shifted from a speculative what if to a fundamental how fast. The expectation was that the company would fade into the background of the 2024 AI bubble. The reality is that they've used 2025 to build a massive revenue-generating machine that is now being showcased alongside the biggest names in tech. We've seen a 7% jump today because the market is realizing that the agentic commerce they are talking about at the Roth conference isn't a future dream. It's live, it's scaled, and it's generating fees right now. As you look at your own portfolio, whether you're using SoFi Active Investing or Interactive Brokers Trading, consider where the control layer of the next phase of the internet lies. If Rezolve truly owns the transaction layer for AI, the gap between the current $2.72 and the analyst price targets near $11 starts to look less like a fantasy and more like a delayed reaction. The tension between the skeptics who see a beaten-down small cap and the bulls who see a multi-billion-dollar infrastructure play is exactly what creates these high-volume trading opportunities. Keep an eye on the $2.85 resistance level. If we break through that with the volume we're seeing today, the 200-day moving average is the next logical target. But remember, in this sector, the only thing more dangerous than missing the rally is ignoring the risks of the integration. Stay sharp. Watch the March 30th numbers and don't let the noise of the broader market distract you from the specific revenue milestones this company is actually hitting. The contrast between what people think Rezolve is, a speculative bet, and what the data shows it's becoming, a profitable commerce utility, is where the real opportunity is hidden. Would you like me to analyze the specific institutional buy-in levels for Rezolve AI to see where the floor might be?